This is a trade recap for May the 31st, 2012 on the ES and Eurorunner trading systems. Taking trades from 1 o'clock in the morning through 4:15. The first trade here of scalp wasn't after the first 5 periods of the stop loss line, therefore it wasn't valid to take. Throughout the rest of these periods, these are all just prior to news. This scalp here comes out just before a 1:45 news release. This scalp here was generated just before a 2 o'clock news release, therefore these scalps aren't valid to take. You need at least 15 minutes of profit, 15 minutes of time to make profit. If you enter here on this 2, you only get 15 minutes from when the 1:45 news release came out on that morning of the 31st, which was a chef GDP quarter-over-quarter is very important. You got to close that 5 minutes before that release comes out. So this wasn't valid to take, even though it made profit. This was not valid to take either, even though this one made profit of 6 ticks. Both were just before news releases. This trade here to go short was a valid trade, but it was cautionary because it was a 5.5 move before. Anything that's 5 points or before prior makes it a cautionary trade. This should therefore be changed to cautionary trade. And it should be minus, I think it was zero ticks made, because the entry here was here on 1075, and the exit was one candle before the 3:55 news release we had this morning. This morning was a lot of news. At 3:55 was the German unemployment change. Anything that's German for orange should always be exited or red. Anything for orange that's chef related should be exited as well if it's a large release like a GDP, for example, retail sales, CPI. Those are the really important ones for the chef. But still, chef is important enough that it's best to just exit positions or not take on new ones beforehand, unless you have at least 15 minutes to make profit. Moving forward here, we have a 440 trade that on the chaser price of 1550 was right here. We have a news release at 5 a.m., which therefore on this particular trade, CPI for the euro year over year, wasn't enough time to take this trade either. Going forward here, we have an 8:15 ADP release. So unfortunately, the 8:10 trade that's set up here was a trade generated by a candle before the news, which we don't take. And then going forward, we have an 8:30 release, which means we don't take the scalp. That happened at the 8:30 candle. And then going forward, we have the market opening at 9 o'clock. And this 3 right here as a scalp, because this 2 was news related, the pullback in price from here to here wasn't really a genuine pullback in a scalp. If you're going to take a scalp that's intra-series and you want a 2-point pullback, don't use the candle that's news generated, because this 2 is not really a sincere push on the part of the market and then pulling back 2 points. It's a news generated scalp. The pullback in price is because of the emotions related to the news itself, the pullback. Therefore, this 3, as I told people in the room to not take this 3. This was not a genuine push in the market. This was not a genuine scalp number. Moving forward, we go to 9:30, which is the 2-minute candles. But I calculate back. Okay, go to the 31st. Alright, at 9:32 we had a trade to go long. We don't take trades in the first 15 minutes of the market open. 9:30 to 9:45 is off limits. The next trade here, unfortunately, did happen at 9:46, but there was a news release at 9:45 on the Chicago PMI. This is a big market mover, and there was a fairly large deviation. So we didn't take any trade at 9:46, and none of these trades after 9:46 fit the rule of inter-series scalp until this trade right here. This 3 did, because there was a 2-point pullback between this 3 and this 3. The pullback was from here to there. Therefore, this scalp was a valid intra-series scalp to take. A valid intra-series scalp to take. 8 ticks were made from the open price here down to the wick right here. Some of the traders got in a couple of ticks better in price, but we always use from the open price down 8 ticks. Now, for those that got in at that price, many traders did make the 2 points here. Actually, most people in the room made the 2 points here. For those that got in a tick or lower in open price, they moved their position to break even, when the market does reach the 2 points from the open price here. Oops, sorry about that. I just, what did I do there? I'll go up. Okay. Moving forward in time, we have another valid scalp here to take. The first number in the series, the 2. It was taken here. It was exited, 8 ticks of profit here. For those that didn't make it on this candle, it touched here. It actually went through a tick again, and then went through 2 ticks right here. So everybody made their profit. Most everybody made the profit right here. But for those that got a tick or 2 lower in the open price, they made it right here. But I use always the open price because even when a trade loses 2 points, if it only touches the 2 points, I use that as a loss just as I use this as a gain. So there's fairness in doing that. This was a cautionary trade because this previous trade made more than 5 points, more than 5 points, made 10. So as long as it goes over 5 points, we use a cautionary trade method. Now, given that this trade had gone up here 8 points without a pullback of at least 2 points, on cautionary trades, I tell everybody to take a 2-point pullback off the highest price, the most extreme price of the move, if there's not been a 2-point pullback since the beginning of the move. Here you can look and go up and see there was never a 2-point pullback anywhere. The biggest pullback was about 1 point. So we took an entry here, 2 points back. We took our 8 ticks out of profit right here. And then these scalps, none of these scalps, this scalp was the first scalp in a series, but this was a trade that was already active, so therefore you don't take a new scalp if you have a current position in the market. All of these scalps going forward, none of them fit the rules of a 2-point pullback or a 3 minimum period in the stop loss line that is flat. So none of these were valid scalps to take. Going forward, this was a valid scalp to take. I really wanted the room to take this first turn up in the stop loss line. We used 20 bars for that to make it a sprint. This was only 17 bars, but it was so close. And that trade, and if entered here, would have actually made 8 ticks, whereas this trade here entered on the scalp ended up losing 8 ticks. This is something which we're taking a close look at because 15 bars may be enough. This was only 17. We're using 20 right now as a minimum, and 15 might very well be enough. This is a good example of how 15 bars was certainly enough. And then going forward here, we have a cautionary trade to go short. The movement from here to down here was approximately 7.5 points, and there was no 2-point shake-off on the way down. Anytime a move's over 5 points and there's not a 2-point shake-off, we take a cautionary 2-point pullback on the entry short. So this was, again, 7.5 points without a 2-point pullback. From here to here was 1 3/4. It wasn't 2. We used 2 points for a reason. And so that because this went from here to there without a 2-point pullback, the cautionary trade, being a more cautious trade, of course, we take a 2-point pullback from the lowest, most extreme price. We enter here, and we look for 2 points of profit, which was made there. Going forward here, we have to have trades up past the yellow for a long, and beyond the yellow for a long, and beyond the yellow for a short. This trade short obviously is beyond the yellow here. This trade long was not. This scalp also was not beyond the yellow. These are rules for entries and for scalps. This scalp, this first turn up in the stop loss line fit the rules for a sprint trade. Please refer to my rules for what a sprint trade looks like. It's 20 periods of flat line on the stop loss line, or 20 periods with only 1 turn up on the stop loss line. Only 1 turn up basically makes it flat. Therefore, this is a valid scalp to take. It made 10 ticks. These are very simple rules for the scalp. There's only 2 rules, one or the other, for a sprint to be taken. This made 10 ticks, which is for the sprint take profit. And then all of these scalps here, none of these fit the rules for a valid pullback, and this was the end of the day. So this is a total of 38 ticks made on the ES. 34 ticks, excuse me. As for the Euro, let's go back to the 31st morning. We go to 1 a.m. where we take profits from. There's no valid scalps. The first valid scalp was here on a 3. That lost 5 pips. The next valid scalp was here on a 3. This made 2 pips. You take it out of the first cautionary triangle. So this lost 5. This made 2. Next, we have a cautionary trade because the previous made more than 50 pips. So therefore, we take out only we take one half of our position size. So we use 1/2 for the scalps and 1/2 for the cautionary trades, and then twice as much for a standard entry. This was a entry here, exit on the first cautionary triangle if it occurs with a flat line on the stop loss line. We exit there for 5 pips lost. And then we have a scalp that's valid here, which loses 10 pips. And then we have a scalp that's valid here that makes 15 pips. So 15 plus the 10 plus the 5 plus the 2 and the 3 and the 5. All these together, if you add them all up together, the euro lost 3 pips on Thursday. Thank you very much. Look forward to seeing you in the room.